Hi everybody, Jared Johnson here. I just want to talk a little bit about probably the biggest theme of the year so far. And that big theme might be, AI, right? You might be thinking, yeah, we're talking about AI. Not really. What we are talking about is momentum, right? Momentum stocks. And those stocks do happen to be very AI related, right? We have Nvidia and we've got AMD and so on. And so we see a lot of momentum behind these big movements. And if you're in the boat where you're thinking, I didn't get enough exposure to those, and I want to, I think it's going to keep going. I think Nvidia goes up forever and it never comes back down. Well, then that's one point of view. But what I want to kind of talk about is whatever you might end up doing, what I would recommend is really thinking about how you're going to approach trading these stocks. Now, I do a lot with options, I do a lot with stocks, I do a lot, in all this space. But what I want to kind of talk about is if you're going to try to chase some of the momentum stocks, Nvidia, so on, make sure that you're doing it in a way that you have a very fixed and I would say limited risk on the downside. So if we look at some of these stocks, if we look at Nvidia, AMD, some of these guys that have been going nuts, that are at all-time highs, typically speaking, as a general trading rule, it's quite risky to try to buy shares at these upper levels, right? I would not want to be trying to buy shares. Now, again, you're going to have to determine what your investment style is, what your time horizon is, what your risk tolerance is, and so on. I'm not trying to give anybody any advice on that side of things. I'm just saying, if you're going to chase momentum, make sure that your downside potential is far less than your upside profit, right? So the risk on the downside needs to be as limited as possible. I've made a little bit of a list. Let's see if we can make sense of some of this stuff, and we'll look at a couple of charts and talk a little bit about that. Okay, here's an Nvidia, for example. Nvidia has run like crazy, and here it is up a couple of percent again today. There are going to be people, and inevitably there are people that have, all around the world, all around the country, so on, that have said, I'm so confident I'm buying in up here. Now, again, trading principles in my career have said, be so careful and avoid as much as possible buying stocks at all-time highs. But Nvidia has made many new all-time highs, and if you would have bought any of those previous all-time highs, it would have worked out great for you. But at some point, one of these all-time highs is going to be pretty messy and pretty tricky. So my whole goal is to say, all right, if we're trying to chase some of these momentum stocks, what is a better way of doing this? Now, I'm not going to spend too much time talking about strategies and so on, but let's look at like an AMD, doing the same thing, making all-time highs, making some good runs here. And I just have a couple of notes. If a stock is way up here, I think one of the lower risk methods that we can use is a put spread. Now, a bullish put spread, if you don't know what that is, do a little bit of Googling, do a little bit of searching and kind of find that out. But bullish put spreads, we have limited profit. If this thing runs up another 50%, we're not going to take advantage of all of that. But if this runs down 50%, we're not going to risk all of that. So if you buy shares of stock up here or long call options or whatever you may do, you're definitely going to be risking a fair amount on the downside. A put spread, especially if you put these strike prices, up there a little bit, if the stock keeps running, you can definitely make more than you're risking, which is a decent method to use in a stock like this. If you're finding stocks that are kind of slowly going places, they're sideways, they're up a little bit, down a little bit. Synthetic covered calls are good on those. Regular covered calls are good on those. Credit spreads are good on those. So I like I like kind of putting a little more risk on stocks that aren't all the way at all-time highs. That's my personal method. These are just a few thoughts that I'm sharing here. Stocks that are at lows that we think have a great opportunity of hopefully doing something great, I still like credit spreads. I still like put spreads. But in those cases, I get a little more interested in long calls. Now, long calls have limited downside potential depending on how far in or out of the money you are. But I like to, use maybe some pretty inexpensive long calls down there, in hopes that, these stocks have maybe bottomed out and started to, move higher and so on. So put spreads, long calls are kind of how I like to approach lower markets. Kind of middle markets, synthetic credit spreads, regular credit spreads, and then, things that are at higher points, I tend to avoid a lot, but, these things are still running and still moving, and I think a put spread is a good way to go about that. Now, on a put spread, depending on how you position it, especially at these higher levels, these stocks that are running like crazy on momentum, I would try to risk as little as possible. If you're going maybe $1 apart on your strike prices, like on some of these, we're looking at, $80 and $81. Or if it's a bigger stock like an AMD and they might be $5 apart, Nvidia's $5 and $10 apart, just try to risk less than you stand to make on the trade. If it's $1 apart, maybe risk 25 or 30 cents for a 75 cent gain, right? We just really want to protect against the downside is what we're trying to do on these stocks that are super high. So put spreads are great for that. Stocks that are low, hopefully reaching their low points, I feel a little more comfortable taking a little bit more risk on those. But again, risk is the name of the game. Protecting against the downside is the name of the game. So we want people to be safe, be careful, but here's some opportunities to look at with some of these stocks. And I'm making this video because, I get a lot of questions and comments about how to jump on these movements. And I've kind of given up on trying to talk people out of, don't buy stocks at all-time highs, because people are doing it and it's been working out pretty well. So if you're going to do it, control the risk in the best way possible, and these are some really good examples of how to really minimize that risk on some of these high-flying stocks. So hopefully that's helpful. Good luck. Questions, comments, leave them below the video. Happy to chat about any of these points. Thank you, and happy trading.